Very good morning, friends. I am Nalnakshi Swami, welcoming to my channel Smart Index Edge. Today's topic is Iran Israel war impact, Indian markets, crude, and gold key levels. So, friends, right now the biggest global trigger is the escalating tension between Iran and Israel. Whenever Middle East tension rises, three assets react immediately: crude oil, gold, and equity markets. So let us decode, not emotionally but technically, what this means for Indian markets and where the key trading levels are. Because markets don't move on news, they move from memory to memory. What it means for Indian markets is India is major oil importing country. When crude rises sharply, rupee weakens, inflation fear rises, foreign investors turn cautious, IT and banking face pressures. Oil and gas stocks may outperform, so expect gap volatility at open. Now let us come to the structure. Nifty outlook. If global risk off continues, first support zone is previous weekly swing low. On the weekly chart, you can see the previous weekly swing low is 24,571. If market gaps down but holds above previous day low, this is previous day low, then it reclaims pivot, it shows absorption. Then short covering rally possible. Otherwise, remember, in panic situations, first move will be emotional, second move will be structural. Already Nifty, I have applied the rolling pivot reversal magic, my indicator. On the rolling pivot, already on January 26th, it has shown the weakness. It fell down to February 2nd to the level of 24,571. It pulled back and this down move will continue. This is the structure. Structure was weak. You can see when the price moved up, no Gan Hilo never turned positive, and it is already trend has turned negative on the weekly. Not on see the structure itself, it is telling it is weak. Sell, you can see on the, if I zoom it out, you can see, let me take out this so that you will have full picture. If I zoom this, you can see the market has fallen below the S1. This is S1. That is a weakness. It was a pullback rally. Sorry, friends. Pullback rally. And then you can see all sell signals over here. So market can breach this low. There is possibility. Not at once, but immediately it may not happen. You can, this is the reference level, 24,571. If it start breaching, more to come in the market. It may even go to 23,960 because the market monthly POC is around 24,060. It can even go to that. That will not happen immediately, even it can happen, but you should be prepared for this. You should be prepared for the downfall, and immediately better to stay away from the market. Bank Nifty reacts fastest to foreign investor flow. If crude sustains higher, financials may see pressure. Let me go to the crude oil and show you what is happening in the crude oil. Crude oil already shown strength in the market. You can see I am on the weekly chart. It has on January 12th itself, it has crossed the R1. Now it has moved higher, consolidated, and it is preparing for the next move. It is showing strength. It can immediately go up to 6,000. If it crosses this level, it can go up to 6,572. Crude can even increase. Crude, um, it may go even up to $80 or something. So, friends, then what happens to but remember, what happens to the gold? Gold thrives on uncertainty. Dollar stabilizes, yields cool, and war escalates. Gold can continue upside. If gold, even the gold was showing on structurally, let me go to the gold mini futures. You can see structurally, I am on the weekly chart. See the price action over here. It is trading above the pivot. If I go to the daily, let me go to the daily time frame. It has crossed the R1. Crossed the R1. So my rolling pivot, with the rolling pivot, you can see, and the immediate monthly POC is around 154,215. The market has moved higher. Even gold will rally. This is the situation, friends. It can do. What can you do? This is not a week for prediction. So this week you should have smaller position size. You have to do level based execution. You should have fast profit booking. No emotional trading, friends. You should not trade emotionally. Emotionally means by seeing the news, don't jump into pressing the button for to the downside. You should wait, because immediate reactions you are not going to trade. Immediate reactions will be maybe gap down. Gap down should not be traded. You should wait for the structure pullback, and if it is a failure, then you can go for a shorting opportunity. Friends, this is very uncertain condition. You need to be very cool, and you need to have stable mind to trade the market, or otherwise, if you cannot make out, stay away from the market. It is better to stay away from the market. So Iran-Israel tension is equal to volatility. Crude becomes strong. India will be cautious. Gold strong. It is risk of equities. Sell and rise until structure shifts. Do not trade headlines. Trade structure. Let price confirm. Because in trading, patience is not weakness, it is positioning. So, friends, this is my summary, actually, what you need to do. So, on Monday, do not panic, do not trade immediately. That is emotional. If it is a gap down, huge gap down, do not trade emotionally. Stay cool, don't enter into the market, wait for it. See, if it is a huge gap down, it will not balance immediately. But that is an imbalance. Imbalance takes many days to balance. Okay, friends, thank you very much. Nalinakshi Swami signing off.